Hi, this is Charles. How you doing? Hope you're having a great day. Well, today we read that the Bank of England, which is the UK central bank, has revised its previous forecasts, and they're a little bit more cheery about the economy and how things are going to go, but not that much cheerier. It's still not really what I would call great news. That they expect that the economy will shrink by just under 10% for the year. Previously, it was thought to be higher, but this is still the biggest annual decline for 100 years. They also think that the economy will grow in 2021 by 9%, which seems very high to me. It would be incredibly high if we did do that, but maybe they're comparing it on the current year to next year, and 3.5% in 2022. Interest rates were kept at 0.1%, which is historical low, and the governor hinted that he would keep rates low for possibly 5 years, which is not, when you've taken out a 5-year mortgage, 5-year fixed rate mortgage last year, it's you think, why did I do that 5-year fixed rate mortgage? But then at least you know where you are for 5 years, whatever happens. The job retention scheme has worked well in terms of keeping people employed, but there's still fears that when that ends, there'll be a lot of unemployment. I believe something like only 20% of office workers and people like that have gone back to work in the office. Most are still kept at working from home. The negative rates or the near negative rates are, they're good news for some people, but not very good news for investors, not very good news for people coming up to retirement and drawing a pension, because rates are so low that it will affect the annuity rates. And if you think about it, the rates you're getting, it's not even, you're not even getting £1 for every £100 invested. You're getting more like 10 pence for every £100 invested, or a pound for every £1,000 invested. It's just incredibly low. But also you think, well, it must be helping borrowers, right? But in fact, no. The banks, as I've been said before, it's been confirmed that the banks are not passing on rates, and mortgage rates have actually gone up. They're actually charging more for mortgages despite these historical low rates. And when you think, the margins that the banks are making on their mortgages now, it's unprecedented, really, how much they're making. I remember when base rates were, say, 10%, and the mortgage companies would be charging 12 or 13% for a mortgage, which is 3% over the base rate. Now, the base rate's less than 1%, and they're still charging 3 and 4% on some of the mortgage products, and charging fees on top of it. So I think that the mortgages at the moment are a little bit of a rip-off by the banks. They give you what looks like an attractive rate, but then they add a fee on, they add exit fees. Then if you want to leave the mortgage early, they can charge fees of 6-7% of the mortgage, which can be crippling. And then they charge a fee to give you your mortgage deeds back, which is mostly electronic now anyway, which can be a couple of £100. And then when that fixed rate comes to an end, you either have to fix with them again or take another deal with them and pay another fee, or they're going to jack up the rate to a variable rate that they just make up as they go along. There's no standard variable rate anymore. So I think that should be looked at, because I think borrowers are getting a bit of a raw deal at the moment. That's what I would say to the Bank of England. Get your lenders sorted out. Get them to charge a reasonable rate to help protect consumers, really. Lenders here don't allow very much flexibility on mortgages either. When properties are sold, they can't be sold with the mortgage as they can in America. You can't. It's a bit more difficult to do seller finance deals when you can't take over the existing loan. They insist that it's paid off. Then you have all the penalties with that, and then you take out a new loan with all nice new loan fees. And then, so I don't think it's a good deal. even the way they work out the repayment on a repayment mortgage, but that's a bit of a technical issue. So the forecasts are a little bit more upbeat. Unemployment still expected to double to around 7.5%, and the economy to slump 9.5% for this year. So I think unemployment is still going to be an issue. Half as many jobs have been advertised as compared to last year. And although property prices have jumped recently, I would expect them overall to fall if the economy keeps going the way that it's going at the moment. And I think it's going to need something more than just a stimulus to get things back to normal, because people are already holding back on spending, and our economy is largely based on spending. It's the GDP is largely based on what people spend, consumer spending, and we're a consumer-based and service-based economy. So if people don't get out and spend, then the economy will suffer. We've lost the whole of the summer tourist industry as well. We've lost so much in the last 6 months, and we're still stumbling, we're still stalling. It seems like we're still not getting back to normal quick enough, in my opinion. So that would be my advice. Let's get back to normal as quickly as possible, and give people that confidence that things will be okay. We built all these hospitals, we bought all this PPE, some of which they had to send back, and it didn't. The mad rush for ventilators didn't really happen. I think a lot of that money is just wasted. Yes, you have to be prepared for this, but the money is not really well spent in that respect. But they expected a mass rush of people going to hospital, but it didn't really happen. So where was this? They always say we listen to the science. Well, the science maybe wasn't right then. The science in the beginning of the year said you don't need masks, you don't need to close off airports. Now they're saying something different. So, but then they say, oh, the science evolves. Well, the government also bought 50 million face masks and then found that they're not safe because they don't fit properly. 50 million. I can't remember exactly how much they cost. It's part of a £250 million contract with a company. And because it has a loop that goes around the ears and not around the whole head, they're saying, well, they don't fit properly, so they're not safe to be used in the NHS. Now, somebody needs shooting there, because what were the procurement people doing at this point? How can you spend hundreds of millions of pounds without a sample? How can you spend all that money without seeing a sample and testing it? It just seems crazy. And apparently one of the people involved with the procurement advises the government, but also advises the company that they bought the mask for. So someone's head needs to roll here, because you can't just spend that amount of money and then the goods turn up, you open the box, oh, no, this is not quite right. Or, you give them to the NHS and say, no, this doesn't meet our specification. So what are these procurement people doing? There needs to be more of a business-minded approach to this. I think the NHS wastes a lot of money on procurement. I've dealt with the NHS, and I know that there is tremendous waste in the way that they do things, and that needs to be really looked at. Now, we were talking about property a little while ago. This stamp duty holiday has helped boost the economy and stimulate the property market, which is good news. But a lot of people want to get into property but feel that they don't know how to, or they perhaps think they need a lot of money and haven't quite got enough money to invest in property. They think, well, if I go and buy that property on a buy-to-let basis, that I need 25% deposit and I haven't got that amount of money. But there is a way you can get into property without necessarily needing to have a lot of money behind you, and without necessarily needing to have a fortune in cash sitting around waiting to get into property. And some friends of mine, this is not me doing this, but some friends of mine that I know quite well, and that I've been involved in some of their programs and mentorships, and they're running a special no money down property event next week. It's a series of 4 evening seminars from 1900 hours, or 7 p.m. to 21 p.m. to 9 p.m. in the evening, from the 9th to the 12th of August next week. It's called the No Money Down 4-day event. And every day they'll have a different speaker talking about how you can get into property using creative strategies, but workable strategies that will equip you to get into property and get cash flow going without necessarily putting your own money down, or in some cases not needing to put any money down yourself at all. Now, I think this is a good seminar to attend because I think the workplace is changing. There will be mass unemployment, and we never know when it's going to hit home. So if you can learn new skills and perhaps get into something different and build maybe a side income on the side that maybe one day could help you get out of the rat race, then why not learn? It's a free seminar, free webinar, and I'll put a link up on my Facebook and on my website, moneytipsdaily.com. You can see lots more articles there. So have a look at that, learn some new strategies. It's not just about buy-to-let, by the way. It's not just about, well, go and buy a buy-to-let property, put 25% down, and then sit on it for 25 years making, a 4 or 5% yield. No, it's not about that. It's about using creative strategies to create cash flow, first of all, and then talking about other things like, there's more than one strategy than just buy-to-let in property. There's a lot of things going on with the planning, for instance. The planning laws, the government have now published details of the planning laws, which I'll be talking about tomorrow, and how I think these planning laws will help to speed up developments. They'll help to help developers to get permission and build new developments, new houses, to speed up the process. At the moment, it's taking far too long with local plans and that sort of thing. So they want the planning authorities, the local authorities, to get out of the way of development. Now, some people might not be happy about that, but I think obviously the country needs something like 200,000 new homes every year, and they're not reaching that target at the moment. So we've got to do something to make it easier to get property built, and this is part of it. So learn some new skills next week. Register for this webinar. There'll only be limited places. I'm not running it myself, but friends of mine are, and believe me, they've got some great information there that you'll learn next week. So have a look at the link there, and I will speak to you again soon. Thanks for listening. Have a great evening. And by the way, if you listen to this in 3 weeks' time, I apologise, but there's not much I can do about that. But if you miss this webinar, then just drop me a line on Facebook or LinkedIn. Just try and drop me a line. So like, I missed the webinar, but I'd like to get into property and learn some no money down strategies. Obviously, when this goes out, sometimes people might catch it, in the next couple of days. They might not catch it for several weeks. So what you're seeing on Facebook Live now, yes, it's here now, so you can click on the link straight away. But if you miss it, just drop me a line, and I'm sure there'll be something else, maybe another company offering something. I always get these things sent to me to publicise. So just let me know, and we'll get you into property using other people's money and none of your own money, or no money down, as they say. Thanks very much. Have a great evening, or have a great day wherever you are. Bye for now.